Good morning, UPBOptionMillionaires.com on this Monday, October 8, 2018, about a half hour before the opening bell on this Columbus Day, Indigenous People Day, sunny day, cloudy day, cold day, hot day, whatever day you want to call it. It's a day when the banks are closed, the bond market is closed, but the stock market is open. Alas, here we are with S&P 500 futures to start the trading week, down 1/3%, NASDAQ futures down even more than that, almost 0.5%. On the heels of a really ugly end of last week. You can see S&P 500 futures, kind of the same action that we saw at the end of last week. We had a bounce after we hit our lows on Thursday, a nice little move up overnight, started to roll over, and then when the market opened, we had a quick bounce and then a really swift decline, much like we did on Thursday's session, a swift decline. This was on the heels also of like 10 or 11 sessions straight of afternoon swoon. That afternoon swoon morphed into all-day swoon, absent a brief burst to the upside late in the trading day. So here we are again, opening up the week with this kind of pattern where it looks like we're going to roll over, maybe a bounce at the open and then just a complete collapse. So when is this market going to head higher? Yeah. Actually, the irony is we're just a few percentage points off of record highs. The Dow Jones Industrial Average was at record highs last week. Clearly it's a market that, is a little bit skittish. The VIX is up over 16 this morning, up 10%, held over that 15 level. That's been a key level. China's been falling to pieces. China ADRs such as Baba and Baidu have just been destroyed. Baidu looks to break 200 today. Baba, month low for Baba, down to almost 150 here pre-market. See, NASDAQ futures down almost 0.4% this morning, and then the VIX is up over 16 levels. So let's look at some individual charts here to start the week. Twitter. Now, you saw Twitter on last week. It was up $1, down $1, up $1, down $1. But the overall trend, I know, if you zoom out a little bit, this pattern looks a little bit like something you would see in a PG-13 magazine, but more of a head and shoulders. Okay, let's just look at two shoulders and a head, and support here at 2450. But looks very bearish. I've been talking about this one for a while. So if you like Twitter, maybe look for it to hold support and bounce off it. But right now it looks very bearish, and of course, helping to weigh down the social media stocks, Facebook. Now, this is a trend line that has been in place for many years here, the support trend line. We've broken through it. Very bearish for Facebook. Absent a move back up above it, I mean, we're looking at 130s possibly for Facebook. And, if Facebook goes to the 130s, it's going to, tough to say that the market's going to move to new all-time record highs. We'll probably see continued weakness. So look at this trend line. This goes back 5 years. Let's go back a little further to when it was back in the mid-20s. Not the 1920s now. This is the start of 2013 when this trend line started, and each time it's come down to it, really substantial bounce to the upside. And we did have a brief bounce, played for it, got the 170 calls, and that worked out great, but then the weakness has picked up again. We broke through it now, that long-term trend line support. So again, it's another name, looks very bearish here, social media. So if this falls down to 150, 135, that's going to take Twitter through the head and shoulders, and you can look at low 20s for Twitter. Yeah. Amazon also, you see all-time record highs recently, now pulling back, breaking through support. Momentum looks pretty negative. And, if the weakness continues, which is, as it stands now, looks pretty likely, 170, the 1750 level looks like the nice support level. And at that stage, the momentum will probably be turning when we get these momentum turns. Usually a pretty robust move to the upside. And if you look at April here, I was just looking at implied volatility for Amazon. Somebody's asking about it in the chat room. The implied volatility for Amazon has not been this high since April. So April is when we hit our previous momentum turn before the one that we saw at the end of September. That ultimately moved us up, but could not clear the record highs that we saw at the start of September. So look for Amazon support at 1750, and then a nice momentum trigger here, and probably a strong move to end the year at all-time record highs for Amazon again. Again, the timing of it is going to be difficult. Look at Google. Not as bearish a chart, but 1100 looks like support, so about 67 points from this level. Apple, a couple analysts upgrading the price target. Support just under 220 here, but a nice bull flag going. So Apple, again, weakness is going to give way to new all-time record highs. That's what's been going on since the lows of March 2009. So despite, the ominous, feeling that you get in this market when everyone, if we fall 1% today, it's another markets in turmoil episode. The economic recovery is over. Now you would say the market's looking out 6 months saying, all right, well, maybe the tax cuts, have run their course and earnings reports aren't going to be as robust. Something else to think about is we have record corporate debt. And as interest rates rise, we saw bonds really get clobbered last week. As this interest rates start to rise, the cost of that debt is going to increase, especially when you have some of these corporations who have been piling on a debt, like Domino's. They're going to have to roll it over. And when they do it, it'll be at a higher interest rate. And, that's going to affect their bottom line. So let's get into the bonds. TLT. It's funny because TLT has been putting in this wonderful head and shoulders pattern for quite a while. And it was kind of like a fake out. It looked like it was going to do it. Oh, not today, not today. And then finally, and this was at the start of 2018, finally we've come through. We're at the neckline here, a break of which will send us down to the low hundreds and ultimately down to 95. Chart reminds me a lot of FCX. FCX had a beautiful head and shoulders pattern years ago. I was like, here it is, head and shoulders. We're about to break. We came down to the neckline, and what happened? At about $25, it bounced right off that neckline, and it took a year and a half before it finally broke through like it should have here. It should have. Let's just erase this. It should have just kept falling down to about $5. So that's kind of what TLT has done. It's like, all right, here we go. Bond market's going to fall apart. No, not here. Now, a year and a half later. Thank you. Yes. When you've just been like, well, this pattern is just not going to work out. So TLT definitely breaking down here, looking definitely for the fourth time, this head and shoulders pattern that is, we'll call this an extended head and shoulders pattern. Looking here, if we break through this level, certainly opens the door here for 95 on TLT. Some other charts to look at. Amazon, Google. Let's go for the small caps, because small caps been leading the market since the election in 2016, November 2016. Remember the breakout we had? We were up, I don't know how many days. It was like 16 trading sessions in a row. So if you look at TLT here, just in the last, look at that. Domino's just got I was just talking about Domino. Just got a target raise this morning. But you look at small caps here. The IWM came down to about this 160.5 level. A nice reversal off the lows on Friday. Look at the momentum trigger is really what I'm watching here. So you can see momentum is pretty negative. We haven't seen this negative momentum since April. When we came down to this negative momentum level in April, a sharp recovery. We had more of a modest one in July, but guess what? Sharp recovery. So when we get that buy signal, which is going to come at some point, it's going to be a really sharp recovery. And you can see the momentum stays more to the upside, more positive momentum than it does to the negative part here. If you look, we've had some pullbacks that have lasted in the summer, back in August 2017. That lasted pretty long. But for the most part, it's a brief dip into negative territory. This is a little bit more prolonged than what we're accustomed to, but it's been a pretty sharp move to the downside. So I'm expecting once we get this trigger, it's going to be a really nice move higher, and that's going to be a nice tradable bounce. But we're getting to that point. We're getting close. So that's small caps. Dow Jones Industrial Average hit new all-time record highs last week. And you see, it's a nice bull flag. We hold this level here at about the 263.5, and still the Dow is setting up for a breakout of this bull flag to new all-time record highs. And you can see the momentum for the Dow has been pretty robust over the last couple of years, despite the fact that it lagged in making new all-time record highs. We had small caps, we had the S&P 500, we had the NASDAQ all making record highs here earlier in the summer. It took a long time for the Dow Jones Industrial Average to not only recapture the highs we saw in January, but to break above it. Some charts. So I look at TXMD. I continue to watch. They have three FDA approvals this year. The next big decision coming at the end of this month. Despite we had a really sharp move to the downside, over 10%, but I still think the stock is heading higher into the end of the year and in 2019. From a long-term perspective, you see we break out not too far away from record highs, and at the same time, as the stock continues to grind out on the heels of just increasingly positive news, and despite a bevy of insider selling as their options are coming due at the start of January 2019. So certainly things that have been weighing down the stock are going to become tailwinds as the stock breaks out, which is rapidly increasing short interest, new all-time record high short interest for TXMD reported in its last report. We'll have another report out this week, and I'll update you on that. With the shorts, I mean, if you think about how short, of course, Elon Musk knows how bad shorts can be for a stock. But if you look, or at least for the price of the stock. If you look basically how shorting a stock works is you're borrowing stock that had no intention of being sold and you're selling it. So to say that doesn't weigh on the price per share of a stock, I mean, it's a miracle if it doesn't. I mean, how's that possible? Unless you just have 40% more people willing to buy the stock at precisely the time those 40% of the float is borrowed and dumped into the market. So a couple other charts to look at. GNC, still like this stock long term. You can see on Friday, despite the negativity throughout the market, GNC was actually higher on Friday. And it's broken out here, although momentum has turned down after it broke to 450 after trading down in the low twos, but hit support, multi-year support, and I think it's going to break out to 5. And then in 2019, double digits for GNC. Vitamin Shop, another breakout that we had this summer after its earnings report. Could not hold on to all of its gains, has pulled back into that earnings gap. But its earnings report comes out, next one in November, and I think that's going to clear us into this second earnings gap and ultimately up to over $20 a share for VSI. VSI, its short interest has increased as the stock has increased in value. Of course, just short interest was heavy here as well. So there's, just like any other stock that's beaten down, there's two views to it. The shorts are saying it's going to zero, and the longs are saying it's going higher, just like TXMD. When you have massive short interest, a lot of it was opened at lower prices. TXMD had, I think it was over 12 million shares short opened right here, right at this level, in the 450 to 525 range. Well, guess what? When it's a $6 stock, they're down. They're losing money. They're over, they're in the red. And if the stock continues to melt to the upside, they're going to continue to lose money on paper until they close their position. And so they're betting at, it's only a $5 stock, they're betting it a complete failure. And yet for the last 12 months, the company is almost 3 FDA approvals we'll see at the end of this month. And, I think the stock's going to head higher. That's my opinion. I'm in the calls. The shorts who are borrowed and sold 40-something% of the float think it's going to zero. Failure! And, if you go back the last 4+ years for TXMD, it's just been dilution, insider selling, and we're still seeing that. So they've got a lot to hang their hat on. We've got positive news this year. They have 5 years of just delays and dilution. Delays and dilution. So we'll see who wins this battle. A couple other charts to look at. How about GME? Been waiting for the buyout here. In advanced stages of the auction process at the end of August. We are now in the middle of October. So let's just call those buyout talks in advanced stages. I don't know what advanced. What's advanced? Late stage advanced? Advanced or advanced? So GME looks to me, despite the weakness, that I still think it's going to have over $20 a share. And then from the long-term perspective, we're bouncing off that 10+ year support. I believe it's a 12-year support line. Look in the middle of 2012. We were down here. Fraught with negativity. And then look at the move happened actually into the end of the year. Well, here we are. Heading into the end of the year, I think we're going to see a move to the upside. It's just me. Market's not agreeing 100%. But if you look, despite the volatility that we've seen with GME, we're still well over the highs that we saw at the start of summer when we broke out of that wedge and that brief pullback. And of course, we have that buyout. I think it's coming. That's just me. The market's not priced for it just yet, even the options market. So perhaps I'm the only one who thinks that's what's going to happen. Maybe people know what's going on with the talks. I clearly don't. The last we know is what they reported on their earnings report, that they were in talks. The fact that they don't have a permanent CEO, I just think it's going to happen, and that's it. I'm going to end it at that. All right. The market's going to open in about 15 minutes. I was long-winded this morning. Apologize for that, but I'll see you in the chat. Remember, have a great trading day. Happy Columbus Day. Happy Monday. Happy Indigenous People Day. Happy sunny day. Happy cloudy day. Happy cold day. Happy warm day. Whatever day you want to call it. Just let's make it happy.